Welcome to the Daily Insights That Matter. We begin today's DITM by talking about India and the Gulf countries which are looking to begin discussions next month for a possible free trade agreement. In just the last 2 years, India has signed trade agreements with Mauritius, UAE and Australia. It is also currently in final negotiations with the UK, the European Union and Canada. Now, India and the Gulf Cooperation Council or the GCC member countries are expected to start talks on a free trade pact next month with an aim to boost economic ties. Now, the Commerce Minister Piyush Goyal ji earlier had said the Gulf Cooperation Council had reached out to India seeking a free trade agreement. Now, India and GCC member countries are expected to start the talks on the free trade next month. The GCC is a union of 6 Gulf countries which consist of Saudi Arabia, the UAE, Qatar, Kuwait, Oman and Bahrain. Given that the GCC countries' profiles are similar and India has carved out an FTA with the UAE, it may be simpler to make similar offers to other GCC nations as well. Many nations are seeking to ink a trade agreement with India, realizing India's potential to push global trade growth. Having said that, economic ties between India and the 6 Gulf Cooperation Council members have historically been significant. That's because GCC's large oil and gas reserves meet the majority of India's energy needs. India, on the other hand, is significant for GCC considerations for their food security. That said, the GCC region holds huge trade potential and a trade pact will help in further boosting India's exports to the market. As a result, India and the GCC are officially formalizing its partnership, and this will be very significant for us. Now, in a move for the first time, the National Highways Infrastructure Trust will let retail investors become equity partners in Indian infrastructure projects such as the roadways. The National Highways Authority of India's Infrastructure Investment Trust or InvIT will be tapping into the capital markets as it is looking to raise nearly 5,000 crores to fund the road projects. Now, what exactly is Infrastructure Investment Trusts? Infrastructure Investment Trusts or InvITs are institutions similar to mutual funds which pool investments from various categories of investors and invest them into completed and long-term revenue-generating infrastructure projects, thereby creating returns for the investor. Now, the retail investors have not yet been permitted to invest in such projects, and the majority of the road sector InvITs have remained private with the investment from banks, pension funds, and institutional investors. However, individual investors were given a 25% reservation for the first time in the 1,500 crore debt offering in the NHIT's recently concluded second round of funding, enabling the trust to go public. Now, while InvITs have been around for a while, retail participation in InvITs, and that too via the equity route, will open newer investment opportunities for investors which are currently poised to grow exponentially and are also looking for diversification benefits. So what does all of this news mean for you? The GCC holds a crucial strategic position for India and would offer the largest market to Indian businesses in the Pacific region. If done right, an FTA with the GCC will be beneficial to India. This will have an indirect positive impact on you. The NHIT allowing equity participation, providing investors with a lucrative investment option in India's growing infrastructure sector, is definitely an indirect positive for you and I. While I say this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.